Well, Trump addressed the whole nation last night, and he gave very mixed signals. So, on one hand, he said that they want to hit Iran extremely hard over the next 2 to 3 weeks and bring them back to the Stone Ages. But on the other hand, he tries to soft play the current conflict and comparing it to World War One, World War Two, how they have lasted multiple years compared to Iraq, and basically saying that this conflict is nothing. We're not trying to start a big war. So it's very mixed signals. He also said that, oh, I don't care about the Strait of Hormuz. I don't care about oil supplies. But on the other hand, he says, hey, we need the market to go up. So basically, this was not a great speech. He could take either one approach or the other. He could say, oh, we're going to take Iran down no matter what, and we will make this conflict last very long. He didn't say that. But on the other hand, he could also just back down and say, hey, ceasefire immediately. But that's not what he said either. So the market reaction was very mixed, and basically everyone's trying to call him on his bluff. He has no plan. And that's what the market thinks right now, is that whatever Trump says doesn't matter. You can see this from the market reactions. The market did not dump and the market did not rise. The only thing that happened is oil price did not come back down because we didn't get an immediate ceasefire. That is the only thing that could have made a difference. Because we did not get the immediate ceasefire, that's why nothing else really mattered. But we will break down the entire speech in today's video, and I'll walk you through the exact points, right about 5-6 points that actually conflict with itself. And I will give you my interpretation on why he even said this. He made this whole, theatrics about it, and how we as investors can position ourselves accordingly after this. I'm just going to start off directly with his speech. So you can watch this whole thing on YouTube. So really the first point that's interesting is at 9-minute 22 mark, he says, the core strategic objectives are nearing completion. Okay. In the very beginning, starting from the first week of the conflict, he said that they want this to be done within 4 to 6 weeks. And now we are in the 5th week. So he says the core objectives are nearly done. And the next thing he said is comparing this to World War I, World War II, to Iraq, saying those all lasted multiple years. The Iran war has only lasted 31 days. So he's saying that's very positive. They're very efficient. However, then he goes on to say that, to talk about gas prices. He says, the recent rise in gasoline prices here at home, many Americans have been concerned about this. But he blames Iran for oil prices and not the war itself. And he also says that this is not the fault of the US. And the opening of the Strait of Hormuz is not a job for the US alone. So that's mentioned at the 12-minute 49 mark. I'm just going to start playing this and you guys can hear him speak directly. Here we go. Let me route this through and play.
Almost no oil through the any imports, almost no oil through the Hormuz Strait, and won't be taking any in the future. We don't need it. We haven't needed it, and we don't need it. We've beaten and completely decimated Iran. They are decimated, both militarily and economically and in every other way. And the countries of the world that do receive oil through the Hormuz Strait must take care of that passage. They must cherish it. They must grab it and cherish it. They can do it easily. We will be helpful, but they should take the lead in protecting the oil that they so desperately depend on.
So basically his point here is that the US takes almost no imports through the Strait of Hormuz. So the U.S. energy sector will not be impacted as much as the Asian countries. So right after he said this, the Asian stock markets really corrected. The Nikkei, Hong Kong. If you look at just MSCI Asia in general, those are doing way worse than the U.S. indices, the S&P, the Nasdaq, etc. And this is because even though he wants to end the conflict soon, he does not want to help reopening the Strait of Hormuz. He says, actually very interesting, if these countries do not get enough oil, they can buy the oil from the U.S. directly. Here's what he said.
So to those countries that can't get fuel, many of which refuse to get involved in the decapitation of Iran, we had to do it ourselves. I have a suggestion. Number one, buy oil from the United States of America. We have plenty. We have so much. And number two, build up some delayed courage. Should have done it before. Should have done it with us, as we asked. Go to the Strait and just take it, protect it, use it for yourselves. Iran.
I mean, so this is very typical Trump speak. He's very American-centric, everything America first, which makes sense. It sounds good. But if this is his whole approach, that would be fine. However, even though he says the U.S. doesn't care, the U.S. is not going to help reopening the Strait, he is also very much concerned with the stock market, the U.S. stock market. So here's what he said next, starting from 1404 right here. So he says, after the conflict is over, the Strait will open naturally. And when that does, stock prices will rapidly go up. Now, he's not talking about Asia stock markets. He's talking about the U.S. And he especially says that when the war is over, stock prices will rapidly go back up. They haven't come down very much, frankly. They've come down a little bit, but they've had some very good days over the last couple of days. So he's very much watching the stock market. He's saying, hey, we're going to do all we can to protect the stock market. And that's why we want to end the conflict soon. But we know what matters for the stock market after the war. Right now, whatever he says about the conflict, there are only two ways it can impact the stock market. In the short term, which is the narrative. If he announces something very positive, right, the market will interpret it positively, causing a sentiment-driven reaction in the stock market. And then there's the long term, which is driven by the price of oil, driven by the reopening of the Strait of Hormuz. And then it flows down into inflation. It flows down into the Fed's decision to rate cuts. And that has a long-term effect on the stock market. Well, we know that oil prices, even if they come down today, that will not directly impact inflation numbers for the next at least 2 months, the April and May core PCE numbers. And I have explained why there's at least a 2-month delay on yesterday's live stream. You guys should go watch that. So the fact that he's concerned with the stock market's performance, the US stock market, but he does not want to help the oil situation is conflicting. Because he can end the war tonight and there will be a relief rally in the S&P, but then the S&P is going to fall back down when inflation numbers come out. So that is why it's conflicting. And that is why people did not really like his statement here on the Strait of Hormuz and on oil prices. The fact that he doesn't care about oil prices. Okay. And then he talks about the U.S. military objectives. So he is trying to, there are two main areas that he's addressing. There is the oil price related to stock price, and there is the military side. So just to cap off on the oil Strait of Hormuz opening and his goal of helping the stock market. So he's really trying to play into this thing called the taco theory. This has been a long-standing thing since Trump came to his second term. So taco is not very nice, but it stands for Trump always backs down. Trump always chickens out is the TACO acronym. So this is not just applying to Iran. This also applies to all of his actions on the tariffs. So ever since Trump had proposed tariffs on Greenland, and every single time he makes a threat in tariffs, as long as it's something that he can reverse right away, we know what happened. He makes a big threat, hey, we're going to give you 100% tariffs on this and this. But then next week, the other side negotiates and he says, okay, everything's okay. So once he does, so many times of these cry wolves, the market tends to react first. So when he makes a big threat, the market thinks that, oh, this just is a tactic. And that means next week, when the other side responds positively and agrees to the demands of Trump, then he will take back all his threats. So this has worked in his favor when he implemented high tariffs, but only as a threat. But in the Iran situation, it is not working. So he again is trying to do this. If you read between the lines here, he says, we're not going to help with the Strait of Hormuz reopening, and we're going to strike Iran really hard for the next 2 to 3 weeks. Now, he believes, and the market believes, he's trying to use the same tactic of TACO, of make a threat, and then hopefully the other side backs down, and then the market reacts positively without him having to do anything concrete. But people are calling his bluff, and even Wall Street is calling his bluff. So here is one of the main global research analysts of JP Morgan. He says TACO applies only when Trump can make his own decisions, and the only thing that matters is his own decisions. So this applies when it's for tariffs, but on the Iran situation, this doesn't work from one side. It has to be unilateral. So when Trump makes a big threat like this, he has to get the same kind of softening on the other side. So the Iranian side have to respond and say, hey, look, we're willing to negotiate. But so far, the Iranian side has not made any, agreeing statements. They have not confirmed anything that Trump has said. So that's why it's not working. So when he said in yesterday's speech that they want to hit Iran extremely hard over the next 2 to 3 weeks, the Iranian side said, let's do it. We're not willing to back down, just the same way that they have denied every single time that there has been a negotiation. So that's why it's not working. And the markets are reacting exactly like this. So if the market sees Trump make this kind of a statement and saying that they are willing to take down Iran completely and destroy them, well, the market would have calmed down, but the market did not calm down. Here's the US S&P 500. It basically is the same level as yesterday. It even bounced a little bit. Why is that? This is because people know what his threats are meant for now. It's a threat. It's a delay tactic. It's a way to get the other side to fold first. And that's why the market is actually slightly up today on the S&P, on the NASDAQ, and on the Dow. However, this is not going to be sustainable because compared with his speech and its effect on the market yesterday, versus what's going to happen over the next 2 weeks, well, there will be real strikes if the Iranian side does not respond positively. So if TACO doesn't work, then the US indices and the US stock market most likely will head back down in a rejection. So that's bad. And that's not only my read, that's what most market prediction reads as well. Here is some of the probabilities. So what are the chances that the US forces will enter Iran by? So the month of March just passed. It looks like it did not happen yet, but the April 6th deadline is coming up. This was the first time that Trump gave a deadline for the Iranian side to respond before they will enter new escalation. Specifically, they will deploy ground troops to take Karg Island, which is Iran's key energy site. So most people agree that 60% chance that this will happen this month, even after Trump came out and with his big speech yesterday, saying that this whole thing is over soon. And this is a month by month. Well, you look at the ceasefire. After yesterday's speech, the chances of a ceasefire after within the next 2 weeks actually decreased. Here is the odds of a ceasefire this week is 2% only. And here is the odds of a ceasefire over the next 2 weeks. Before his speech yesterday, there was a 20% chance of a ceasefire. Now there is a 9% chance of a ceasefire. So it actually backfired. People don't believe that he's going to end this war soon. And you look at the 30-day odds, okay? What's the chance of a ceasefire by the end of this month? Before his speech, zooming in here, March 28th, before his speech, there was roughly 35% chance. Now it's 24% chance. So it completely backfired because he didn't take a very definitive stance saying that, oh, we are going to end the war tonight. He also did not say that, oh, we are going to take this to the end and we are going to, drag it on as long as we need in order to obliterate Iran, like he, somehow thinks this is going that way. He just said kind of somewhere in the middle, hey, 2 to 3 weeks, we're going to hit Iran extremely hard with a big threat. But he already said this before. He said this 2 weeks ago, given the deadline to be April 6th. And now he just extends the deadline another 2 weeks out. So that is very weak. And the Iranian side, they don't have to respond in any other way. They just respond the exact same way. Hey, we didn't have any positive negotiations, bring it on. And it looks like they're not scared. So that's why the market is not buying it. The market is calling the bluff of Trump here, saying that he's trying to take use the taco trade again to prop up the stock market. And chances are it's not going to work. The real difference, the real signal that we need to watch is not coming from the Trump announcements anymore. It has to come from the Iranian side. If Trump's latest speech and what he carries out over the next 2 to 3 weeks is an actual escalation and the Iranian side actually gets scared, then they will have to come out and respond positively saying, hey, let's talk about this. Let's come to a ceasefire. Then that's a positive news for the stock market. But before that happens, whatever he says, it just seems like a delay tactic from now on. Okay, let's go back to his speech and let's talk about what he said on the war situation. So at the 15-minute 16 mark, he said this.
Very shortly, we are going to his military objectives shortly, very shortly. We are going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change.
So he just keeps saying the same thing. First, a big threat. We're going to hit Iran extremely hard over the next 2 to 3 weeks. He says, in the meantime, there has been negotiation changes. He says a regime change, meaning he's not negotiating with the party that's fighting. He's negotiating with some other parties. This is a revolution, a regime change. Yeah, he says here.
We never said regime change, but regime change has occurred because of all of their original leaders' death. They're all dead. The new group is less radical and much more reasonable. Yet if during this period of time no deal is made, we have our eyes on key targets.
So basically, he lays it out here. The group that is fighting is not the group that he's negotiating with. That is a regime change, a revolution. He wants to install a new government or help them come into power in Iran. And then he says, if there is no deal, they're going to hit each and every one of their electric generating plants very hard and probably simultaneously. Well, the first one they have to hit is Karg Island. And the initial deadline that he gave was April 6th. That's coming up in 4 days. By April 6th, if there's no ceasefire, let's see if they actually deploy the troops to take the island. Okay, and he also talked about hitting the electric generating plants. He talked about hitting their oil, and he talked about hitting their nuclear sites. Yeah, so basically a bunch of empty threats again. And the way I look at this is there is really no easy way out of this. The way he is describing this war is also interesting because he says they have already taken out their anti-aircraft in the military, and they have taken out they have no air force. I believe that's the main that's the main victory point that he has said. But if you look at the actual attacks that the Iranian side have carried out, it's mainly by drones. So he doesn't address that at all. So it is kind of scary to think about, he's running out of options here, basically. He either takes it full on and it's going to last much longer, or it's an immediate ceasefire. If he keeps delaying and delaying, each time that he gives a so-called hard deadline, and the hard deadline approaches, and he extends another 2 to 3 weeks and says, hey, here's another hard deadline, the market is not going to react positively because the market will stop listening to what he says and they will listen to the Iranian side. So that's not going to help the US stock market. Okay. So that's basically the main takeaway from yesterday. He doesn't want to help the reopening of the Strait of Hormuz, which means even if the war ends, oil prices will probably not come down right away. This is the first takeaway. You look at the oil price right now, this is at 108, even with no clear change in the war situation. So that's big, okay? Oil price will probably remain high, whether we have a ceasefire or not. Number two, he makes another threat saying that they want to hit Iran extremely hard over the next 2 to 3 weeks. So definitively, this means the war will not end within the next 2 to 3 weeks. And you see the ceasefire probabilities here, very, very low probability for this to end over the next 2 to 3 weeks, the next 14 days. Be prepared for another 14 days of chop. So you can then apply this to the stock market and try to get a action plan going. So if oil price will not come back down over the next 2 to 3 weeks, and if there's no ceasefire over the next 2 to 3 weeks, what's going to happen? Well, if they hit Iran extremely hard, oil price will jump, volatility will jump, and stock market goes down pretty fast. If they don't do anything, and this is just yet another empty threat, well, oil price will still just be high. It'll be within this range between 100 to 115. Meanwhile, the S&P probably will not recover back above the 200-day SMA. And that's the key point to watch here. Because without real de-escalation, without real help in reopening the oil supply lines, there is no fundamental thing that changes. The only things that can add on are negative. Inflation numbers will come out. The next core PCE, next CPI are all coming out in 8 days. And it's looking bad. And that will add pressure on the stock market. And the probabilities of the Fed to cut rates are only going to decrease. Okay. And the probabilities of a rate hike will only increase. Meanwhile, if there's no ceasefire and there's no help in restoring oil supply lines, then the only thing left is Trump's narrative. And Trump's narrative is not working. People are already calling his bluff, saying that he's just trying to use the taco narrative. And since that's not working, this little bounce that we have today on the S&P is probably the only extent that of a positive reaction that the market can get. So I'm not confident in the market at all right now. Over the next 2 to 3 weeks, if there's escalation, the market drops down pretty significantly. If there's no escalation, the market probably chops below the resistance of 200-day SMA, and then eventually it'll drop back down. In either case, I don't think it's a time to be bullish. So that's on the S&P. You can look at the NASDAQ the same way, the same simple moving average, the 200-day. You can look at the Dow Jones the same way. And then that obviously applies to Bitcoin. When the S&P, NASDAQ, Dow Jones react negatively, Bitcoin will react negatively. And the next time that we have a drawdown on the US stock market, Bitcoin will probably retest these 63K lows and potentially break below. So the next 2 to 3 weeks, very risky. I would say the only thing that looks good right now is gold. So gold will perform okay, no matter what. If there is an escalation and every type of risk-on asset sells off, money goes into either cash, bonds, or gold, because it's anti-risk, anti-uncertainty. Now, yields are not dropping. So when there is higher demand for bonds, higher demand for dollar, yields tend to drop, but yields are not dropping. So this is actually a positive thing for gold, but a negative thing for the stock market. So very interesting. And so that's if we have an escalation. Now, if there is no escalation and we just keep chopping with empty threats, gold will do just fine. Even if we have higher and higher volatility as the S&P stays below 200-day SMA, gold will be absolutely fine, because the other pressures will start to get clear, the long-term effects, the inflationary effects. While inflation will not benefit the risk-on assets immediately, but it will benefit gold right away. So once we get the next core PCE numbers, the CPI numbers, gold should see a take up. As long as we don't have a full-on bull market in risk. So the only way gold does poorly is if the war ends right now, the Strait of Hormuz is open, oil price comes down, all the stocks start to rally, Bitcoin starts to rally, then gold can sell off. Otherwise, gold should perform really well. And that's why I think gold is the clear bet right now. Not the S&P, not Bitcoin, not really anything else that's risk on. Having said that, after these 2 to 3 weeks end, I think Bitcoin should be at a very good spot once we find some sort of bottom in the 50Ks range, mid 50Ks. Once Bitcoin goes to that 200-day, 200-week SMA down here at 59, I think that's more than cheap enough for me to start buying. So even if the stock market goes into a big correction, okay, because of escalation or because of just extended, slow war, I'm not going to be worried about Bitcoin as much, because Bitcoin has already been drawn down so much. So at some point, we have to just buy on Bitcoin. And I think that point is is the 200-week SMA. We're not very far away. So that's my plan on the S&P and on the stock market and on Bitcoin. I do expect the S&P to draw down, but once that happens and Bitcoin breaks down below this range and goes into anything under 60K, I'm going to be hitting the buy button very aggressively. Not necessarily because I think the stock market will bounce back right away, but I think Bitcoin will find its bottom very soon if it gets below 60K. Because looking at the past 3 cycles, that is the range where the maximum drawdown is already there, and the bottom is very, very close. Okay, and let me see. That's basically the relationship that I wanted to cover between what Trump said, how we can get positioned. The best thing to be positioned right now is gold. You don't want to be positioned in US market in general until we have a full de-escalation and the reopening of the Strait of Hormuz. And even then, inflation will be high, which drives down risk for a couple months. However, Bitcoin, I think, after the next drawdown, it's going to be like basically bottom prices already. So the time to buy Bitcoin is very, very soon, even if you want to time in a very cheap level. And oh yeah, couple things to watch coming up. So we already had the new ISM PMI print. This is the manufacturing index that gives us the business cycle reading and also early signs of inflation reading. So the ISM is about the same. It jumped to 52.7 from 52.4, which basically means it's the same. The business cycle is slowly recovering. Although above 50 is good. So that's the thing. The business cycle technically is expanding. It's not contracting. However, the main signal to watch here, a warning signal, is the sharp surge in the price paid index. This is a early sign of inflation to come, and very similar to the 2022 inflation surge, where this signal also fired. So most likely, after we get this reading, the next CPI, core PCE readings will all be slightly higher, which means higher inflation, which means more pressure on the Fed to not cut rates and hike rates. So be aware of this. Okay, this number just came out yesterday. And the week ahead, a couple things to watch. Monday, April 6th, we have the whole weekend of Good Friday and Easter Monday. And stock markets will be closed, but April 6th is the deadline that Trump last gave for Iran to back down. Otherwise, they're going to deploy ground troops to Khark Island. Watch out for this. There could be some volatility there. And April 7th will kick off durable goods orders, consumer credit data, and a speech from the Chicago Federal Reserve president. And shortly after that, April 8th, the next FOMC March meeting minutes are coming out. Then on April 9th, we start to get the big inflation readings, CPI, core PCE. So big week ahead. I believe there is something else that we covered yesterday on April 9th. It's skipping my mind right now. If you guys remember what we covered yesterday on this point. But there is another reading that's coming out on April 6th. It's just, I will, go back to yesterday's live stream. You'll see something else that is an announcement on April 6th. Anyways, so definitely big week ahead. And if we don't have a de-escalation by April 6th, Trump might need to do something on his next military operations. And when that comes, that's going to be negative sentiment. And then on top of that, the week we'll have negative inflation data coming out, which is going to add more pressure to the market. So be very careful for this upcoming week for the markets. Follow me on X at VirtualBacon, where I'm going to be dropping daily alpha, and subscribe to the channel to not miss our future live streams. We try to go live every weekday at 2 p.m. Eastern. That is it. See you guys tomorrow on the new live stream. Thank you for watching. Bye-bye. See you on the next one. Cheers.